Well, again, thanks everyone for being here. We really appreciate you spending the entire day with us. I hope that these conversations were valuable. I hope that you guys learned a lot, and I hope that you guys gave us some learnings as well and things to think about and ways for us to improve our business and to better serve our investors. And with that in mind, I know we talked about the good and the bad and the ugly. We talked about operations, we talked about HR, we talked about acquisitions, and we had this presentation prepared for you to talk about those things. We talked about the market and supply and demand, and talk about the people we've hired and our vision and things like that. But the problem is we flipped things around and we kind of spoiled it and shared everything with you already. So instead of giving you the information twice and hearing it again on the presentation, I figured I would just share with you guys some closing remarks, if you will, and instead kind of talk about our bigger vision. And our vision is, here's the high level vision. And some people, their brains turn off when you start talking about long term, right? Because they're thinking about, well, what about this quarter? What about this year? And it's kind of brass tacks. But I think it's really helpful to understand on a 20-year timeline where we want to go. And the answer to that is we want to build a $5 billion portfolio of 50 assets that is in such good condition and in such good locations that we'd all be proud to own and live in them ourselves. So that gives you a little bit of an understanding of the quality of the portfolio that we want to build, and we're certainly not there today. Coupled with that, we want these properties to be owned at around 60% loan to value with other conservative debt metrics, and then we want the remaining equity to be in partnership with around 2,000 investors. So to unpack that, when I say 60% LTV, that means, roughly speaking, conservative leverage, but still good use of leverage, because we obviously want tax optimized returns. We want the depreciation, we want the tax benefits of the leverage, and we want to get strong returns, but obviously we don't want to over lever, because the overarching vision or goal with all of this, why are we even doing all this, is because we ourselves and our partners, our customers, our investors, we want to all together, maybe not in the same bed, but we all together want to sleep well at night. So that is the overarching vision with everything that we do. One thing that Hannah may have mentioned in her conversations with you guys is our plans, hopefully this year, to bring on a controller / CPA in-house, and so that we'll have much tighter controls over our monthly accounting process as well as our annual K1 filings, which we know is a very important point for our investors all across the country, because everyone hates it when K1s are late, and it's totally inexcusable. And so by bringing that in-house, we have more control, and we can make sure that K1s are always on time. So that's just kind of more of a granular example of thinking kind of with an investor mindset and thinking, being forward thinking about what we're trying to accomplish. We're trying to sleep well at night, whether it's from tax filing perspective or from cash flow perspective, or when we have hard times and the market is not always going up, that we have a strong, resilient portfolio, such as having 50 properties that are super well located, that are in good condition, and can ride out any sort of storm because it has the appropriate leverage and smart, sophisticated investors backing us as well. So that's, like I said, we're very far from that reality, because even if we hit, let's say, this big long-term goal of $5 billion in assets under management, it really means nothing if those properties actually aren't serving the mission of being conservatively leveraged, being in partnership with our dream 2,000 investors, which you guys are here in this room, and also being in super high quality locations and being high quality products themselves. So while we may not be, let's say tomorrow, buying the exact perfect, 1 of 50 that we're looking to kind of accumulate into this collection, not portfolio, but like a collection, right? It's a stepping stone. So we might buy a property that's in a good location, but not a great location. But we'll be looking to 1031 exchange it 5 years down the road, 7 years down the road, into an even better located property, or maybe a newer property. And so that's, I don't want someone saying, hey, didn't you say you want to buy property that you'd be proud to live in yourself, and then we go buy kind of a junker? We're going to work our way there, right? So and also the important piece is when I say 5 billion, it's also 50 properties, right? And what does that mean? Well, that means that the average property size is 100 million, right? And we're most certainly not buying a $100 million property tomorrow. I mean, we might, but that's not going to be our average deal size for quite a while, because the types of assets that we're looking for are generally not that large. And that doesn't mean that we're not being faithful to our mission. It just means that we're building towards it. So if we buy a $40 million deal tomorrow, in time that deal will grow, we'll sell it, and we'll attempt to go and exchange it, and it will be into bigger and bigger properties. And the reason for having the desire for bigger properties is because those are more institutional in nature. They lend themselves to being in better quality locations, and they have superior economies of scale when it comes to closing costs, financing costs, operational costs, and overhead costs. So just me personally, I don't want to have a company that's so big that I don't know everyone's name, right? And so if we have 50 properties, that means we can have 5 asset managers, 5 regional managers. There's only one of my mom, but we'll keep it that way. And we can still have this amazing scale of a large portfolio, but still have the close-knit community of only 50 properties, right? We're at 22 properties in the portfolio right now. And so going from 22 to 50, that's not that big of a jump, but the size of the assets are going to jump tremendously, but we're proving out our ability to operate at the scale now as we slowly grow and grow the individual asset size and the size of the portfolio. And then also at the end of the day, AUM doesn't really matter, right? Whether it's 1 billion or 5 billion, it doesn't matter. It's not really going to affect anything. At the end of the day, it's all about sleeping well at night and having great results. But when it comes to numbers, what's more important than AUM is actually the equity AUM, right? And so you could have 5 billion of AUM, but if it's over levered and it's all debt and it's just a sliver of equity, that equity could be gone tomorrow, and you really weren't managing much to begin with. So instead, if you have, let's say, half of that as debt and half of it as equity, that's $2.5 billion of equity that we're able to efficiently manage and grow over time in a select curated portfolio of assets. So hopefully that makes sense. Like I said, this mission is not going to happen overnight. I think really it's probably a 20 to 25 year vision, because it's going to take time to refine the quality of asset, what really qualifies in that select group of 50 properties, and slowly getting there over time. And of course, we're not looking to buy for the sake of buying, right? This is a collection, not just an accumulation. And so for that, we are being very patient. Something that Brad has probably shared with you, and many people have shared with you today, is that we actually haven't bought a property or have a property under contract yet this year at all, right? Which is totally counter to our goal. Our goal this year is to acquire 250 million in assets, and so we've done 0. So from that perspective, we're failing. But we think while we're failing in this goal, we think we are actually succeeding in achieving the higher overarching goal of building that collection of 50, rather than just accumulating assets because our investors are asking us, when's the next deal? So yeah, I think that's all I've got for you for my closing remarks. Thank you very much.